and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and on this special edition, we're going to be discussing everything about how to begin investing. Now, if you are a 25-year-old, this could well be the best time to start planning your finances and begin investing to create wealth and also to fulfill your all dream goals in your life. Now, why is it a good time that I say this? Because economists world over believe that India will be the fastest growing big economies over the next 10 to 20 years. Even stock market experts believe that the Sensex can actually hit 1 lakh in the next 3 or 4 years. Indian government has itself called the next 25 years for India as the Amrit Kal, wherein India will go from India at 75 to India at 100, and this phrase was actually used with the goal of increasing the quality of life of the Indian citizens, and with that the investments are bound to grow. Now the question is, how and where exactly do you begin, and where should you invest to gain multifold returns on your investments? And that's exactly going to be the focus of our show today. Joining in to discuss with more insights on this is Shweta Jain, founder of Investography. Shweta, welcome to the show, and thank you so much for taking the time out. I wanted to begin with your own take on investing in this era. For all those young earners, young investors starting out right now in this year, we've been hearing all these positive commentaries about the next decade belonging to India. Your own sense on whether this is truly the best time that young earners can begin investing?
Hi, Sakshi. Thank you for having me. And yes, it's a great time to be an investor in India. It's even better to be younger and an early investor. So the only issue with when you're young is that everything is demanding, right? On your time, on your wallet, and there's so much that you want to do. There's so much that you need to do. Should I get married first? Should I go on those vacations first? I mean, there's just so much, right? So investing takes a back seat at that young age, which I think somewhere is okay, but you don't get that power of compounding that we talk about or that we
Sure.
theoretically see. You don't get that. So I think investors today have become smarter, especially the young ones have become much smarter than we were at that age and
Yes.
when we started off. So it is great for them to at least begin part of their investments in equity, if not more. At that age, nobody was advising us. We didn't have
Yes.
shows like telling us where to invest and when to start. So I think it's a great time for them to be young and to start off investing, even if they're starting off with a small amount, whether it's
Sure.
1,000, 5,000, whatever it is that they can put
Sure.
aside. But these habits are then to be built for long time. And a lot of people at our age then see PPF and EPF and how that has grown and regret why hadn't we started our SIPs
Yes,
earlier. Uh,
absolutely.
so I
Absolutely.
think
You hit the nail on the head, Shweta, because at this point in time, if you are young, you're 25, you would have all the aspirations to perhaps go enjoy your life. Whatever you're earning, you would want to take that vacation. But hold your horses right there and think and have some long term vision. That's the focus that we want you to have if you are a young earner and are watching this show at this point in time. Because just as Shweta said, many of us who've actually gone further, we actually regret not getting the right advice at the right time, and therefore we've missed out on those precious years when we could have got that benefit of compounding. But in case you are around 25, you have just begun earning, started to save some of your money, it will be the best decision for you and for your life as well to really think about what exactly should you be doing with your money. So Shweta, young earners, what should they begin with? That's the biggest question. First things first, the money that you've just started to earn, you're slowly building up that bank balance, but what exactly do you do? What is the first step?
So I think like investors or like individuals are budgeting their money, right? When they
Hmm.
start off earning, that this amount goes to rent, this amount goes to groceries, this amount goes to whatever else, entertainment expenses, this amount goes to shopping, etc., etc. So they have all these little pockets that they're spending in. I think you should even have these little pockets for saving and
Yeah.
investing, right? There's one pocket which is for emergency fund. So even if you start off 1,000 rupees, like I said, it doesn't matter. What matters is that these pockets are there for you to put in. So start off with your one pocket of emergency fund, one
Yeah.
pocket of long-term compounding. So don't think of it as investing, which then becomes boring, or don't think of it as a retirement fund. It becomes boring. Think of it as that pocket that is going to compound and grow your money. Get rich a pocket, right?
Sure.
Think of one pocket as your insurance, in case
Yeah.
something happens to me, in case I decide to not continue with the same job. So have one pocket for health insurance, have one pocket for life insurance. So these four pockets, I think, even if you're just starting off and you have little teeny tiny bit money, it's absolutely fine. It's that the pockets exist, that all matters, and that you consistently keep adding on to these.
Right. Shweta, now you talked about this factor, the intimidation that a lot of young earners really feel when we talk to them about investments, or when they hear about investments, when they hear there is FDs, there is stocks, there's mutual funds, there's the world of crypto altogether, which is different. There's gold and real estate, the traditional forms of investment. So where should one really begin investing, and what should be the ideal way to start off with? Should they actually have a diversified portfolio, considering that they have limited money at disposal to be investing? So where exactly should they start? I mean, what is that one asset class that you would want them to start off with?
So I'm biased towards mutual funds. So I'm going to say, because it'll give you all the flavors that you want in
Yeah.
one umbrella, and it's so easy to manage. It's so easy for you to understand. It's so easy to calculate. It's easy from all aspects,
Sure.
convenient. So I would say start off with mutual funds. It's also easy to understand, but it could get a little bit overwhelming because there's so many options. The more
Yeah.
choices you have, the more confused you get. So I would say then start off with a simple liquid fund for your emergency fund.
Okay.
Start off with a simple passive fund for your equity long term. And you're sort of set for at least these two. And if there is pressure from a family to do an FD, don't shy away from that. I think it's all right to have an FD
Yeah.
at that point, even if you have to do mutual funds a little lesser, but you have an FD and you have your parents who think that now my child is secure because he's or she's taking the right decisions. It's
Sure.
absolutely, don't go overboard on that, and make sure that you're exploring some of these. I think the important thing at that age is also to explore. So as you rightly said, there's so many options. So explore, no harm in exploring, but don't go overboard.
Yeah.
Don't especially don't borrow money to invest. I think that's
Yeah.
something that no at any age, but at this age especially, because you are so tempted to try out different things. Don't do that. Don't
Sure.
borrow to invest. And if it means that you have to learn and pay a course fee by taking a little bit of a loss in a particular asset class, it's fine. I'm not a crypto promoter. I'm
Yeah.
going to say that I'm against crypto. So I would say don't bet on crypto unless it's your gambling money. So then you could, but that's just my view. You have friends that are dabbling in crypto and you feel left out, then it's absolutely up to you. But equity, debt, gold, gold is also a great place to start,
Yeah.
and it gives our parents also a bit of comfort, which at that early age, it's quite important that we get our parents' approval on certain things, and our decisions are validated. So I think it's absolutely fine.
Sure, sure, sure. Now let's actually break it down. Since you said that you prefer mutual funds as the best asset class that there is for a young earner to actually explore for the first time. Of course, FDs and all, looking at your family, and taking their opinion, you can definitely go ahead. You also talked about diversification, taking a little bit risk here and there is okay, but not going overboard. But if we stick to mutual funds, say for example, I'll take a case study here. There's a 25-year-old who has a short-term goal, maybe to buy a car. A medium term goal for a 25-year-old, be it he or a she, could be marriage, for example. And then a long term goal could be retirement. Now, if one really approaches all these three from the mutual fund perspective, the number of categories and the variety of mutual funds out there, how would you really advise them to pick one fund for each, or pick one category for each?
So I would just say, to keep your life simple. For the short term one, just choose a very high quality, safe, liquid fund, or a debt fund for that matter.
Okay,
So a
okay,
liquid fund. So something like, I'll even give names if that's okay.
yeah,
Okay, so something like a Bandhan short-term fund, which is quite high quality. You can choose that for your very short-term goals. For your medium term goals, you could look at something like an ICICI balanced advantage, because you're going to take a loan against it, whether it's a home or a car or whatever you're planning against that. And that's for 3 to 5 years. So, timeline of up to 3 years is like a Bandhan short term, 3 to 5 years is like an ICICI balanced advantage. And if
Okay,
I'm looking
okay.
at beyond 5 years, so that's the long term and growth and compounding and get rich kind of portfolio. Then you're looking at UTI Nifty 50. You can look at DSP Nifty 50. Any of these passive funds which are Nifty 50. I think that's a great start for you to do.
Okay, and could you also help, say, for example, all those viewers who are listening to you, all those young investors, how does one really pick a mutual fund? What is the criteria for one to really understand that, okay, this mutual fund will be better for me? Since you've taken a few names, to select one out of these names also is going to be a challenge for them. So, how do you really arrive at that decision?
So when you're choosing a mutual fund, I mean there are multiple factors, some qualitative and some quantitative. So for me, anything less than 3 years is short term. So I'm going
Okay,
to choose a short term fund. 3 to 5 years is medium term. So I'm going to take something which has a balance of both equity and debt. So something that we call hybrid. So that's for me 3 to 5 years. And long term for me is equity. So which is beyond 5 years, then you can choose equity. So I
okay.
know a lot of people like equity for buying today and selling tomorrow, but that's
Yes.
not the kind of view that we're looking for. So anything beyond 5 years is then long term and
Got
equity.
that, got that. Now we did talk about crypto a little bit, which you said that it's absolutely a no-no at this point in time. Instead, there are many other better options available for investors who have seen the kind of wealth growing in the last few years, and perhaps those are the instruments that you should one should stick with. Now, but there are several new age investments that have really caught the young investors' attention these days. Now, when we talk about stock investments, equity investments, for example, the new age investors are looking at stock baskets or small cases, for example. How do you really view that? Then you did talk about selling stocks tomorrow and buying them today. The F&O space, that's got the attention of investors as well, making a quick buck. So what would your advice be to some of these new age investments?
I think quite interesting the space is. So, for investors who are looking at equity, small cases are fine, but to understand that they come with an extra risk that you're owning these stocks.
Yeah.
Mutual funds diversify much more, so your risk is lesser. But small cases are a great way to start beginning to research stocks, to understand stock ownership, to get that dividend amount. I think it's quite exciting to have your own small case. So I think that's absolutely fine. I'm not a fan of F&O space because that takes a lot of leverage you have to take. You end up taking a lot of bets, if I can put
Sure.
it that way. So I'm not a fan of F&O space for the simple reason that you sometimes tend to over leverage yourself and over bet yourself. And that's not something that you're owning. So, like small case, also, you're owning these stocks, right?
Yes.
So, investors do understand that these are companies that they're owning. And FNO, they have to take a call on what they see as the future to be. So, I'm not really into the business of predicting. So,
Sure.
I would definitely ask them to stay away from this space. Some other like crypto I already recommended, right? That I would stay away, and I would recommend that you stay away as well, unless it's your gambling money. If it's that
Sure.
money that you're doing, absolutely fine. See, understand that some things that we don't like, somebody else may like, but that doesn't
Yeah.
mean that it's not something that they are not allowed to do. It's your money at the end of the day.
Yes.
So be careful, and your hard-earned money, and even more hard saved money, so make sure that you're going the right path with it.
Sure. What about international stocks? I mean, I've been seeing and hearing a lot of young investors really looking at the international exposure. Of course, we've been also seeing experts talking about how to, in today's day and age, apart from getting your stock portfolio diversified among different sectors that are listed in India, you should also look at the international basket as well. And many brokerage houses now, especially the broker accounts, they're giving an option for direct investments to a lot of investors right here. So for the young investors, is that a space that one should really look at? Because there's also this taxation on the international investments that many investors are actually not aware of. So what would you advise there?
See, again, international stocks, I would think at that age, start off building your core portfolio first. So, Indian equities, of course, we have the home bias there. But I think when we are looking at stocks internationally, you're mostly looking at US stocks.
Hmm.
So, if you're looking between a US and an India, I think you'll still get far higher returns here than in the US, right? So, I would recommend that build your core portfolio first and then go for international exposure. And even if you're going for an international exposure, I would recommend that start off small, start off with maybe mutual funds. A lot of companies do have ESOP options or RSU options for with their companies. So if you're employed, especially in one of these MNCs, you have those options. So you do have the advantage of doing that. So I think when you're taking those stock options, that's good enough exposure, but I'm not really recommending at that age that you go for international exposure. Taxation aside, I'm still not recommending that at that age you start investing in stocks internationally. Maybe when you're closer to 30, 35, maybe
Got that.
start on. When you have a decent sized portfolio, then start sort of diversifying even.
Okay, and you did talk briefly about gold as well, and you know it's a safe haven and has been as a preferred investment option that generations in India have really banked upon, and even today, it's definitely taken off as an asset during weddings and when you want to pass on some assets to your future generation as well. What would you really advise a 25-year-old? How does one approach gold as an investment class? Should one go ahead and get some physical gold? Should one really explore the newer options, the digital options? What would you suggest them?
Yeah, I think gold is a great way to start as well. Physical option, I'm not really recommending because at that age, I don't know how much careful you can be managing and sort of physically storing it, especially if you're
Yeah,
moving cities, homes, and outside traveling. So I'm not really a fan of jewelry as an option. So physical gold becomes a little difficult to sort of manage and store unless you have lockers that you want to do, but I'm not really sure people at that age want to do that. I would recommend gold ETFs for people who want that digital, that gold option, or SGBs is a good option too. But I'm really, again, like I said, I think that would be closer to 30. So once you've built on a little bit of equity, a little bit of emergency fund, little
sure.
bit of insurance, I would say add gold as a fourth option, not as a immediate sort of third option, but as a fourth option. And I think start off with digital gold like gold ETF or an SGB. That's safer and easier to store as well.
Okay, what about real estate? I mean, that has been one asset class that our previous generations have really banked upon because they have really seen the boom of real estate, over the last, say, 40, 50 years or so in India, just barring about 10, 15 years of a kind of a lull that we have seen real estate. But before that, it was definitely considered as the most preferred asset class for most of the Indian homes or families as well. For today's age 25-year-olds, how should one really approach real estate?
I would recommend that they don't approach real estate at that age, but keep
Yeah,
that as a target because I think roti kapda makan for me is a basic sort of needs. So not fulfilling the need of home or your own physical space is something that doesn't go down well with people. So if you want to own your own home, for whatever, whether it's to live in or whether it's to rent out, I think closer to 30, 32 is a good age to sort of start thinking about it. You're kind of settling in with your career at that point. You have predicted cash flows, you have certain investments built on. So it's a little easier for you to then focus on something as large as real estate because it
sure.
does need a lot of money. Apart from your stable career, you also might need to rope in pretty much all the savings that you had till then and then some. So I would recommend that look at this once you're closer to 30, 32, rather than at the age of 25.
Okay, understood that as well. Now, if I have to ask you in the end, say for example, if one really takes one small case study and say, okay, we are going to be identifying a few things that an ideal portfolio of a 25-year-old should have, how would you really have those 4, 5 things?
So I think if somebody had a PPF account, had uh, mutual funds that are starting, had life insurance, had health insurance, had SIPs consistently running, then I would think it's pretty much sorted. I would be jealous of that person because I haven't made so many right decisions at that age. So I would
Okay.
definitely be quite impressed.
Okay, so a PPF to start off with, perhaps for a longer duration, mutual funds, your SIPs, a life insurance and a health insurance, and you are clearly sorted. If you have all of these running consistently and in a disciplined fashion for a long-term vision, then definitely you're on the brighter side of investing as well. Thank you so much, Shweta, for being with us and discussing with us all these varied insights. Definitely very, very helpful. If you are a 25-year-old watching this, I really hope that you've taken this down. Do get started onto these action points as well as suggested by Shweta in case you want to be on top of your finances right from the very beginning. Until then, we will see you again on Business Today TV with a whole lot more coverage on the world of business and stock markets. So do stay tuned.